So welcome everyone. Welcome to Path to Purpose, a three-part webinar series providing essential financial knowledge and practical financial management tools to grow your farm or agri-food business. My name is Rebecca Jacobs, and I'm the Communications and Marketing Coordinator for the Fair Finance Fund. Fair Finance Fund is a nonprofit social finance fund dedicated to providing loans and mentorship services to local food and farm enterprises to grow strong local food systems, local economies, and a healthy planet. On behalf of the fund, we begin by acknowledging that we are residing on Aboriginal land that has been inhabited by Indigenous peoples from the beginning. I and others from the fund work and live on the ancestral traditional territories of the Ojibwe, the Anishinaabe, and the Mississaugas of the New Credit, whose territory is covered by the Upper Canada Treaties. As settlers, we're grateful for the opportunity to live and to work and to be here on the land that has been taken care of for thousands of years, and this land continues to nurture and feed us today. I'm joined by our host, Carson Beauregard. Carson holds a degree in Community Economics and Social Development from Algoma University, and today is a farmer and business advisor with experience in economic development, social service provision, and food service. Carson has a passion for sustainable agriculture and finds deep satisfaction in helping entrepreneurs from various industries to grow their own businesses, and is himself the owner and operator of a microfarm and consulting business in Sault Ste. Marie, Ontario, named the Plant Farm Co. In today's session, Business Planning and Cash Flow Management, Carson will discuss the fundamentals of financial business planning, methods for tracking expenses and income, and touch on the importance of regular financial reviews and tracking. This session is really created to support you folks, so we'll have plenty of time, about 15 to 20 minutes at the end for all your questions. And with that, I'll pass it over to you, Carson.
Okay. So yeah, again, thank you. A big thank you to the whole team at the Fair Finance Fund for making this possible. Just shrink that there. So this will be session number 1 of 3 sessions that will happen over the next 3 weeks. Again, like Rebecca said, today we're going to be covering business planning and structure, tracking income and expenses, financial considerations when hiring employees, and the importance of the profit and loss statement. Session number 2 will be on orderly bookkeeping, standardized processes, maximizing write-offs and tax benefits, and year-end preparation and some creative financing options. And then week 3, we will be joined by a friend of mine, Tony Neal, who runs Wheelbarrow Farm in Sunderland, Ontario, just outside of the GTA. He's going to share his story of farming for 16 years in that area, how he manages his financial systems, how he used community bonds, sold and used community bonds to fund the purchase of an electric tractor, and how COVID changed his business model and financial systems. So a little bit more about my background. In high school, I grew a few plants in my backyard. Some people say cannabis is a gateway drug. For me, it was the gateway to gardening. I've always been business-minded since I was a child, since my parents told me what a business was and that someone could, start a business instead of becoming an employee. So when I was a kid, I had a lawn care business on my street. A little later on, I started buying old computers from our local, it's basically like a Kijiji, but for Sault Ste. Marie. I would buy old computers and I would sell parts. I then went on to do the economic and social development degree in university. I focused a lot of my assignments on agriculture. At that time, I also started a small market garden and was selling to a couple cafes in Sault Ste. Marie. Right after university, I went to work for a nonprofit food cooperative, which was an interesting experience. When I started there, it was kind of officially a nonprofit. And within 3 months, there was sort of a coup within the board of directors, and we turned it into an employee-run cooperative. So yeah, very, very interesting. At our peak, we ran 2 grocery stores, 2 cafes, 2 community gardens, a micro farm. We ran various farmers markets in the region and held a number of special events every year. After about 2 years of that, I moved to work for Wheelbarrow Farm with Tony, where we managed 8 acres of organic production, vegetable production, and then a little bit of pork production and egg production as well. 2 years after that, I moved back to Sault Ste. Marie and started my own farm on under 1 acre. My farm is still running, sort of. I'm basically just doing consulting right now, saving up some money to be able to buy my own land. When I moved back to the Sioux, I rented that acre and ran it on rented land for a few years, and that just got to be a little too much. I would recommend, well, most of you probably have businesses, but if you don't have a business yet and you're looking to start a farm, try to buy property, because it's not fun getting up every day and driving to the farm, possibly multiple times a day, especially if you're running a greenhouse and trying to keep seedlings alive. So I sort of scaled down my farm, and then I went to work for the United Way. And in Sault Ste. Marie, the United Way had started an institutional food bank. And so we had some land there, so I built out a small urban farm there with a decent amount of greenhouse production and raised bed production. After doing that for 1.5 or 2 years, I went on to manage the Small Business Enterprise Center for the city of Sault Ste. Marie, where I would do regular business consultations with all types of businesses. And that's where I linked up with the Fair Finance Fund as an advisor. I did that for 1.5 years and then went on to and currently I'm working with a friend of mine managing their physiotherapy clinic. So very different from what I've been doing for the last 10 years or so, but the last year has been very interesting. So today, again, we're going to talk about some useful financial practices and systems and how my practices have changed and improved over the years. And so we are going to start with a little overview of some common business structures and the advantages and disadvantages of each of them. So I myself still have a sole proprietorship. That was the easiest structure to start back in 2017. So some of the advantages, again, it's very, very simple to start. I think you can register a sole proprietorship in about 15 minutes online. Inexpensive. I think it's $70 right now to register that business. The sole proprietor has complete control over all business decisions. There's very few regulatory requirements, and there can be some direct tax benefits because your business income is sort of looked at just like T4 income. So one of the benefits I had the first couple of years I started my farm was that I tried to rack up as many expenses as possible. So those expenses would go again. I also worked part-time in the winter as a T4 employee. So those expenses went against my business income and my T4 income, which, lowered my tax burden, which was great. The sole proprietorship structure does have some significant disadvantages, though. There is unlimited personal liability for business debts and obligations, which means I think the worst part of this is, if someone tries to sue you or litigate for some reason, then they can potentially have access to all of your personal assets, as opposed to something like a corporation, which we'll talk about next, where you are separated from the corporation. So your personal assets are mostly protected. So some of the other disadvantages of the sole proprietorship is there is difficulty if you're trying to raise capital, trying to bring in investors. There can be a perceived lack of professionalism and credibility compared to other structures. And the business continuity depends on the owner. So if the owner gets sick or just cannot run the business, then the business sort of dies. So probably the next most common structure is the corporation. So some advantages, Again, you do have that limited liability protection for owners. So, if depending on the situation, if someone comes and sues you, they really can only have access to the business assets. So your personal assets are protected. You have easier access to capital through the sale of shares. The corporation can exist perpetually. If you want to step out of the business, step out of the corporation, you can transfer this corporation to other people and the business can keep running. And then there are a number of other tax advantages. This is something you probably should talk to your accountant about. I'm definitely not an expert in this, but there's different types of creative ways you can pay yourself. You can take a dividend, you can work within the business, you can hire yourself as an employee. And again, in different situations, there's different positives and negatives to this. Some of the disadvantages, it is a little more complex and costly to set up and maintain. It'll probably take a couple hours to set up a corporation through the Ontario website. I think it costs around $400 right now. There are some increased regulatory requirements and paperwork that you need to file every year. So, preparing your taxes is a little more in depth. There is the potential for double taxation. Your corporate profits will be taxed, and then if you pay yourself a dividend, that will be taxed again. Or if you pay yourself as an employee, you will be charged income tax on that. And then you do require formal directors or a director, and you sort of have to adhere to corporate governance. And that may sound daunting, but if it's just if you're the sole owner of your corporation, it's really not that much work. So if you are a sole proprietor and you're thinking about transitioning to a corporation, don't let that scare you. It's not a ton of work. And so the next type that I have some experience with is the cooperative model. So this would be a model where you sort of have equal ownership. It doesn't necessarily have to be equal, but you have a number of different owners for the business. So when I went down to Southern Ontario, the cooperative that I mentioned previously was called the Karma Project. And so when I started working there, it was a nonprofit. It had a volunteer board of directors, and then the chair of the board was the founder of the nonprofit. So we decided that some of the board members were making decisions that were negatively affecting the employees. So we decided to kind of dissolve the nonprofit and create an employee-run cooperative, or it was a multi-stakeholder cooperative, with the majority of voting power being in the hands of the employees. So this allows for a bit more of a democratic decision-making structure. The way it worked with us is each stakeholder had one vote, and on the board of directors, we had more employees than the other stakeholders, so we would always have a majority if we needed it. This can allow you to, and a cooperative can be a nonprofit or it can be a for-profit. So again, some more advantages. You can focus on the stakeholder benefits, community goals. There are some other potential tax advantages, and you have the ability to access grants and funding that you might not have access to as a corporation or sole proprietorship. You have the advantage of the shared resources of the different stakeholders and members. Some of the disadvantages, a significant one is slower decision-making process. The democratic process is amazing, but if you don't agree with the rest of your group, then it can be very difficult to move forward and make decisions. You can have difficulty in raising capital compared to corporations because it's a bit more complex. There can definitely be potential for internal conflict among members. I would say if anyone's thinking of starting a cooperative or even a corporation as a partnership, you should almost go to marriage counseling first to make sure you're going to get along with your partners. And then a cooperative model, you are limited to the cooperative specific mission, goals, bylaws, etc. So at the end, if you guys have any questions about these different structures, especially the cooperative, feel free to let me know, or you can put it in the chat now and we can check it out later. So the next thing I'd like to go over is kind of two of the financial documents that are part of the business planning process. So today we'll talk a little bit about startup budgets and cash flow projections. Next week, next session, we will talk a little bit about income statements and balance sheets. So if you guys have already started your business, you're probably familiar with startup budgets and cash flow projections. Startup budget, it doesn't just need to be for starting the business. You can also create a startup budget for a new project within your business. So for anyone not familiar, it is a detailed financial plan that outlines the initial costs required to start a business or project, includes expenses such as equipment, inventory, initial marketing efforts. And then cash flow projections. This is an estimate of the inflows and outflows of cash over a specific period. Usually it's either like a quarter of the year or the full year. I will generally do the full year. And it's used to predict future liquidity and manage cash effectively. So we'll take a look at the template that we would use when I was managing the Small Business Enterprise Center. We would provide this to anyone coming in that wanted to start a business. The reason I like this template, especially in that context, was because people were coming in and they were always interested in either getting a loan or getting a grant. So this setup here, generally they would have to have some sort of contribution that was coming from them. So you can see this third column here, the owner contribution, and then funder number one, number two, number three. This could be funder number one could be a loan from the bank. Funder number two could be a grant from an organization like Trillium or NOHFC. Lots of different options for grants and funding out there. And then you just want to be as detailed as possible when you're filling this out. And then once you have your nice polished startup budget, you want to move on to your cash flow projection. So this is for forecasting and managing incoming and outgoing cash, identifying potential shortages, ensuring timely payment of bills, and generally supporting informed decision-making and strategic planning. So this is the template we used, and I really love this one. You always want to break down your different sales outlets. So in a farming context, in my situation, in the situation with Wheelbarrow Farm, we had number one sales outlets was farmers markets. Number two was a community shared agriculture program where we would sell basically shares of our harvest at the beginning of the year, and then clients would get a box of produce every week for a period of 20 weeks. You may have online sales at your farm or food business, and you may have a number of other sales outlets. And then you might be working a side job, and you might be funneling money into the business periodically. You might also have gotten a loan or that grant. So this row here would be where that number is going. And then in terms of the expenses section, you can get super detailed with this section. What I would recommend is trying to keep this sheet simple and then maybe having another sheet in the same Excel or numbers file. So an example of this would be equipment purchases. Maybe if you intend to buy 10 pieces of equipment, you don't need to list all 10 pieces, in this line. You could list that in another sheet and then link the total of that sheet back to this line. Same with material and inventory expenses. Again, you don't need to list every single piece of material that you're purchasing to run the business in this sheet. You can list that in another sheet, take the total, put that back into this sheet. So this is very important to set up before you start your business, and then also very important to come back to this every month and see if you are hitting your targets. So we will talk a little bit more about how you sort of plan to hit these targets. But before we do that, I want to just touch on this row right here, the labor expense, because this is a big step in running your business. Once you're ready to hire someone, there are some very specific financial considerations to think out very clearly. So there are a ton of considerations when you're ready to hire your first employee, but these are the financial. I would say these are the ones that kind of in the context of your business financials. So number one, do you have systems in place that will standardize operating procedures to ensure that your investment in that employee is not wasted? Because if you may have, a lot of people may have these systems in their head, but it's very important to actually document these systems and have basically a manual or a guidebook ready for that employee before they start. Lots of business owners get away with not having that documentation, and you can be profitable, you can make it work, but this will make your life a lot easier. So some general systems on a farm, your ordering system, who are all your vendors, what are you ordering every year? When you're starting the season, you're going to be in your greenhouse, you're going to be starting your seedlings, you're going to be out in the field direct seeding. So what is the exact procedure for every single vegetable and seed you're going to be putting in a cell tray or the ground? How are you planting, those seeds? How are you planting those transplants? Different transplants will require different tools, different methods. How exactly are you watering those trays? How long are you watering for? How much water are you applying? What kind of irrigation equipment are you using? How does all that equipment go together? What tools are you using for weeding? How often are you weeding? When are you fertilizing? What are you using for fertilization? Are you using different fertilizer for different plants? When you're harvesting, how exactly are you harvesting a head of cabbage or a head of lettuce, a bunch of carrots? How many carrots are in that bunch? How many radishes are in a bunch of radishes? How are you bringing that back to the wash and pack station? What is the exact movement around the wash and pack station? What does every bunch need to look like? How are you managing your inventory? What temperature does the walk-in need to be? How are you setting up your booth at the farmers markets, or how are you packing the bin for your CSA? Again, everything should be documented so that if your employee has a question during the day and you're, out in town or you're on the other side of the farm, they can quickly pull something up on their phone, or they can refer back to, the printed out copy and find the answer sort of without wasting time. And again, you have very similar systems in a kitchen or in a restaurant situation. And you can kind of see the list here. I won't go through this again. So number one, document your systems, create standard operating procedures before you even consider kind of shelling out that money for the employee. Number two, what is the true cost of hiring an employee? Do you have the cash flow, and what will the return on your investment be? So this is a little calculation that we've used at the physiotherapy clinic, because we've been expanding very rapidly in the last year, and we've been looking to hire some people. So Kim is not an actual person, but in our context, we require our therapists to do 25 client hours a week. That's the only way it will be profitable for us. So I have a few different columns, because generally when you can have some negotiations when you're looking to hire an employee. You can also just have a set rate that you're willing to pay, and you're not willing to budge on that. With us, we're willing to negotiate a little bit depending on experience. So I've sort of broken down what is the hourly wage that we are willing to pay someone. And then we offer a pension plan and benefits. So what is the cost or what is the total compensation to the employee when you include the pension and the benefits? And then what is the employer's actual cost? Because the hourly wage plus the pension is not the employer's actual cost. You need to add on the mandatory employment related costs, basically the money you pay to the government, and then possibly other things like insurance, a number of things, the training, a number of things to consider here. So I've broken it down, what is our cost biweekly based on the hourly rate, hourly with pension, and then total cost biweekly. Then I've broken it down into an annual number as well. So when we're ready to go and negotiate with an employee that we've made an offer to, and we know sort of what our scale is or our range, we have something like this in front of us so we can quickly refer back to it. And then also express to the employee, you may be getting paid $33 an hour, $34 an hour, but the total cost to us is actually, 39 or 41. I think that's something that's very important to relay to employees. This is a personal philosophy. It might not be appropriate in every business, but I like to be as transparent as possible, just so employees feel like they're fully informed and have sort of more of a stake in the business. So in our context, again, I said at the beginning, we need 25 client hours per week. This is sort of an easy calculation for us. We get paid a certain rate per client's hour. And so we know we need that amount to have this employee be profitable. This calculation is a little harder to make when you're, growing vegetables for market or you're running a restaurant. But it can be done. You sort of need to calculate how many units of carrots, radishes, lettuce need to be sold to break even on this investment in this employee and hopefully generate a surplus. So that sort of brings me to crop planning. And I highly recommend this book by Frederick Thoreau and Daniel Brisbois, Crop Planning for Vegetable Growers. I don't have an equivalent recommendation for the sort of the general food industry or restaurant industry. But the idea is before you do your cash flow projections, you need to come up with the number that you want to make for the year. So let's say you're a sole proprietor, you're running a small market garden, and you want to make $60,000, in profit. So you'll have to go to your cash flow projections and sort of calculate, okay, what sales do I need to make to hit that? Well, first, what are your expenses? Calculate your expenses. And then what sales do you have to make minus the expenses to hit that $60,000 in profit? And then you can go to your crop plan and say, okay, I know how much money I have to make at each market or each week. So how many bunches of carrots, heads of lettuce, tomato, pounds of cucumber, pounds of tomato, how much do I need to sell to hit that weekly target? And then based on that number that you need to sell, you create your crop plan. So if I need to harvest 100 units of tomatoes or let's say lettuce each week, then I probably need to plant 130 units to make sure I have that 100 units to bring to market. So you sort of work backwards from the amount of money you want to make to your cash flow, to your crop plan, and that will just set you up for success. So the same can be done with a restaurant or a food business. How many, if you're a coffee roaster, how many bags of coffee do I need to sell to hit that income target that I'm looking to bring home? Or how many fried chicken sandwiches do I need to sell, again, to hit that income target? So always work backwards from the amount of money you need to make. And you'll find out if you do that cash flow projection, you'll find out if that is realistic. Maybe if you're looking to make that 60,000 and you come to that number of chicken sandwiches you need to sell and you realize that it's just not going to be possible, then maybe you need to reconsider your business model. So we are going to move on to tracking income and expenses. Once you've got your business running, how do you track your income and expenses in a way that will make your life easy when it comes to tax time? Because you do need to keep every receipt for everything you purchase. The benefits of that is if you do get audited, you have all the proof you need to kind of prove that you've been operating your business in good faith. And then you also want to keep every receipt because as a business owner, you get the 13%, the HST return to you at the end, either at the end of the year or at the end of every quarter if you choose to report that way. So being able to track this effectively, will make your life a lot easier and cause you to work less hours. So I guess number one, what type of bank accounts are you using? I started my business using my personal bank account just because I went into the bank and I didn't want to pay the fee for the business bank account. So, I was able to avoid that fee, but it did cause me some trouble when it came to tax time because I then had to go through basically every receipt and my bank statements and kind of remove my personal expenses, separate my business expenses, and then put those all into a spreadsheet. I was using QuickBooks at the time. I've sort of moved away from QuickBooks and I just use an Excel spreadsheet now. And I found that to be fine for me. But what I recommend after sort of years of experience is either set up that business bank account and pay that monthly fee, or you can just set up a separate checking account. Many checking accounts are free to use as long as you have a certain minimum in the account. So you don't necessarily need a specific business bank account that's provided by your bank. You can just open a second checking account and run your business through that checking account and sort of avoid those bank fees. And then in terms of your expenses, if you're paying cash for something and getting a receipt, that makes the tracking process a little harder because you do have to take that receipt back to your computer and enter that number into your spreadsheet. It's not just automatic. If you're using a debit card or a credit card, then it sort of becomes automatic. You can go on to your online banking, download your Excel, your statement for the month in an Excel format, and just quickly copy and paste those numbers, total it up with a function, and you're sort of done for each month. So what I would recommend is, get yourself your debit card for your checking account, or a credit card is even better because you can earn extra points. And just keep it simple. Buy everything you need for your business, either on that debit card or credit card. The downfall of using something like a credit card or debit card is that every vendor you're purchasing from will have to pay, a 2% fee. I love the idea of just using cash to purchase everything in my life. That way we're not just feeding money to the financial institutions, but on the other hand, having the ability to pull an Excel spreadsheet from your online banking makes your life a lot easier. So pros and cons to that. In terms of your income, when you're at the market making sales, or you're in your restaurant making sales, cash is fantastic. You're not going to have to pay that 2% fee. But these days, not most people, I would say, do not carry cash. They carry a card. So finding a good point of sale system that has reasonable rates is something you want to spend some time on. I've used Square in the past. I've used Shopify. I've used Stripe. Kind of depending on the industry and your situation, there will be different fees for different systems. So do a bit of research on that. And then again, when it comes to tax time and you need to put all your income into a spreadsheet, If you're taking cash payments, you don't really have a record of that. If you have a point of sale system, you generally have an easy record. If you're doing e-transfers, you sort of have a record, but you have to go into your email and kind of reconcile those transfers. So the point of sale system is the easiest way to go in terms of tracking. And so the next thing to consider, and sort of one of my favorite things about running a business, is seeing my financial report card. So this is what's called a profit and loss statement. So a profit and loss statement is a financial report that summarizes the revenues, costs, and expenses incurred during a specific period, typically used to assess the business's financial performance. So this is an example, and these numbers are not accurate, but this is an example of what I will create every month at the end of the month to sort of see how our business is doing. So you can see at the top here, what I do is I go into our checking account, because all of our money comes into our checking account, and I see what came in for the month. So let's say $20,000 came in for the month. Or sorry, what went out? I'm referring to the checking expenses. So what did we spend through the checking account for payroll, for rent that was pulled out automatically, number of expenses that just come out of the checking account. So 20,000. And then what did we spend on the credit card, the business credit card? 5,000. So expenses total 25,000. And then I go into the checking account and I see what came into the checking account for the month. So total of 45,000. Then you set up a function in Excel, or you can just do it by hand. You subtract expenses from revenue, and you get your kind of actual profit and loss for the month. So in our business at the physiotherapy clinic, there's a few other numbers that I like to include. Because we deal with insurance and we don't always get paid, the minute the client leaves the building, there are accounts receivable, which means that is money that is going to come to us in the future. You might have the same thing if you're selling vegetables to a restaurant and you have some sort of term with them where they pay you 15 days after, up to 15 days or up to 30 days after you deliver the product. Then you will always have some money coming to you. So this accounts receivable number at the bottom is not something that's normally part of a profit and loss statement, but I like to see it, and my partner likes to see it when we're looking at our summary profit and loss. And this is what this is. This is a very simple summary profit and loss, very high level view of profit and loss. What I usually do after creating the summary is I go into the expenses and I will break them down line by line, because that will give me a much better understanding of where we're spending our money and possibly how we could sort of remove some of those expenses or decrease expenses. So highly recommend, create the profit and loss summary every month, and then spend a little more time to create that detailed summary where you break down every line item. And the examples of the line items, we can go back to this cash flow statement. These would be the line items that you're going to break down. And then you can see exactly where you're spending your money. Maybe you see, oh, we spent too much money on bank charges and account fees. Why did that happen? And how can we decrease that for the month going forward? Maybe it looks like we spent too much on advertising. Do we need that much advertising? Maybe can we reduce that by 10, 15, 20%? So again, profit and loss, that's one of my favorite times of the month, is to kind of get our report card and figure out how exactly we are doing and how we can improve for the month going forward. So just to expand on this a little bit, some of the benefits of the P&L: provides a very clear picture of your business's financial health, highlights the profitability and expenses and areas of concern. It enables you to track financial performance over time, helping to identify trends, seasonal variations. In the Excel file, when I set up my profit and loss, I always take all of the last month's column and put it beside. So when I'm looking, say, my June profit and loss, I can also see my May, my April, my March, my February, January right beside. So I can compare those summaries very quickly. So again, helps you make informed decisions, helps you manage expenses, evaluate your performance, budget and forecast. If you have shareholders or investors, it's a very nice way to kind of communicate your progress or your performance. And at the end of the year, when you have to prepare your taxes, you have all these profit and losses ready to go. And you can kind of throw them all into one spreadsheet and submit that to your accountant, and you're good to go. So we've come to the end for today. Some of the key takeaways from the presentation. Do some research on your business structure and try to choose the best business structure to minimize cost and risk and maximize profit and tax advantages. Utilize these common financial documents, don't ignore them. You can run a business and, never think about your cash flow projections or your budgets, but it just helps you stay organized, helps you ensure profitability, and you can make incremental improvements, as you go. Create those systems for employees specifically, but not just for employees, for everything else in the business, all of your admin procedures, all of your financial management procedures, and just make your life a lot easier. And then look forward to your monthly report card, which is your P&L. And so that is the end of the presentation. If you guys have any questions, I'm happy to answer them.
Thanks so much, Carson. We've had a few questions come through the chat. So the first one that came in here was, how should I start calculating the mandatory employment-related costs? I'm looking to start hiring folks for my small farm, but I'm not sure how to go about calculating what these costs could be.
Yeah, so the CRA does have a nice calculator on their website. If you just Google CRA MERCS calculator, mandatory employment related cost calculator, that will pop up and you can kind of go through that process. Sort of a quick and dirty way to calculate MERCS is you take your wage and then you multiply it by either 1.15 or 1.20, somewhere between that 15% and 20%. And that will get you a pretty accurate calculation of the extra expense when paying your employee.
Thank you. Another question came in your experience, are any banks better or worse for small business bank accounts?
I guess that depends. It depends on, the price of the account. If you're using a credit card for all your purchases, what kind of points are you receiving? There are definitely credit cards that are better than others in terms of receiving points. Definitely accounts that are cheaper than others to use. Like credit unions are fantastic because it's sort of a community-owned bank. Lots of benefits to credit unions as opposed to bigger banks. Although I've had some bad experiences with credit unions because they are smaller. So yeah, that might not be a great answer, but it sort of depends. You sort of have to do your research on the variables that you're interested in and kind of come to that decision.
Fair enough. And similarly, Michael here is asking if you have any recommendations for a reasonably priced app that can handle small business accounting and receipt management. So some folks have recommended Wave, Zoho Books is another one. Not sure how to pronounce this one, but New Cash is also a free software. If you have any other software or app recommendations for small businesses specifically.
Yeah. So I guess it depends again. I guess that's the answer. I have experience using Sage, Shopify, QuickBooks. QuickBooks got fairly expensive. Usually they have a pretty good deal, like an introductory deal for 12 months, you'll get a certain price, but then it will go up after the 12 months, which is why I ended going away from QuickBooks. I have found that having a CRM or sort of a point of sale system and then just using Excel is the best way for me. But again, I would say try a few different ones out, especially if there's some free options out there. Try them out, see how you like them. Generally, try to gain experience using Excel. I know spreadsheets can be daunting, but it's a skill that no one can take away from you. You know, just practice, watch some YouTube videos. I follow someone on Instagram called Miss Excel, and you know, every day she's putting out different tips and tricks to use Excel. I found that really valuable. So, so again, QuickBooks, Sage. I think there's one called FreeBooks. Your point of sale system may have something built into it, something like Square or Shopify, HubSpot. So I guess again, kind of depends.
No, those are all great recommendations. Thanks. So we have about 10 minutes left, so do feel free to chime in here. If you have any questions, you can raise your hand or just unmute yourself and ask, or drop them in the chat. One other question did come in, asking if you have any SOP best practices. So again, before you recommended really having your SOPs down before employing additional people to help out with the business. So if you have any best practices on how to just get started getting those documented.
Yeah, I mean, like the best advice if you haven't started creating SOPs is just go ahead and start. Like pick the most maybe the most sensitive procedure in your business, or maybe one that really creates value, because in your business there are procedures that create direct value, like cutting that head of lettuce and preparing it for market. You know, that's kind of direct value. Now, cultivating the soil and killing weeds, that's not really creating direct value. So maybe you want to start with something that creates direct value. Just get into a Word document or Google Docs, write it out. You know, perhaps bring it to someone else and say, hey, does this make sense to you? If I was just to hand you this document and ask you to go harvest a bunch of lettuce, are you confident in doing this? Does this make sense? And then, you know, give that to your employees, see how it works. Make sure to come back to that document and revise it as needed, because you might find right away that, oh, step number 3 doesn't make sense anymore. We need to adjust that. So I guess get started. Just create the first one, see how it goes, and then iterate along the way.
Yeah, and that's great advice to get some external eyes on it too, to make sure it makes sense to other people.
Yeah.
Maybe I'll pause here to see if anyone would like to chime in with a question.
I see another question here that was part of one of the ones you mentioned already, but how do I find grant information? There is a really good portal that was created by the federal government. I'm just going to try to look it up quickly and put it in the chat. I believe it was created by the ISED division of the federal government, which is Innovation, Science, Economic Development. Let me see if I can find it here. Business Benefits Finder. I believe that's what it's called. So check, if you're looking for grants or funding, check out this website here. Yeah, really, really great tool to find different types of funding, either if you're a nonprofit or a for-profit. There also is some paid services. I'm trying to remember what it's called. If you just Google paid funding services or paid grant services, there are some decent options there, and they don't cost too much, something like $100 a year. That can be a very reasonable fee, especially if you end up getting thousands back in grants.
We can definitely send out a few of these links to everyone when we send out the webinar recording after this too. I I see Michelle here is asking, what was it like to convert from a nonprofit to a co-op? And do you have any advice on how to go about that or to navigate that?
Yeah, it was very interesting experience. It was a little dramatic, like the board of directors were not happy with us, but we felt it was the best decision. It was a lot of work. You have to create a set of bylaws, you have to create your articles of incorporation, and if you've never done that and you've never heard of those terms, that can sound very daunting. There are some pretty good guides online that will kind of walk you through these steps, and they will give you templates to create those bylaws and articles of incorporation. Again, like I mentioned, like if you have a team of 5 people that you want to start a cooperative with, you need to make sure that you are all on the same page and you have the same goal and vision, and you're going to adhere to the same plan to achieve those goals. Because if 3 months in you realize that 2 of your team members sort of had a slightly different vision, then you're going to have some significant problems in decision making. So again, maybe schedule a session with a marriage counselor or like some sort of group counselor, just to make sure to have someone on the outside that can make sure you guys are all on the same page. And then ideally everyone has some skin in the game as well. So ideally everyone has put in like an equal amount of money and time, in starting this venture.
Maybe I'll just wrap up by saying a huge thank you to everyone for taking the time to join us today. To Carson, thank you so much. It was really, really informative. I certainly learned a lot. I hope everyone else did as well.
Yeah, and I second that. Again, thank you everyone for attending. Thank you, Rebecca and Sally and everyone at the Fair Finance Fund. I'm definitely looking forward to next week and the week after.
All right. Have a great rest of your day, everyone. Take care.
Take care.